Hey guys, it's Drew with Austin Craft Realty, and today we're going to talk about the Austin market and how it relates to the rest of the national housing market. We're going to break it down into 4 different quick sections. So the first is going to talk about current Austin market internal trends as well as the Austin area. The second is going to be a really brief explanation of what drives housing costs. The third is going to be the National Association of Realtors stats on some of our competing markets. And the fourth is going to be looking at NerdWalletcom's cost of living calculator and comparing how much money you'd have to make to have the same lifestyle in a different market. So the first thing about the Austin market is it's hot right now. We all know that. Austin proper, the median price is $420K right now. That is an 11% higher number than year-over-year statistics from 2018. Austin area is a little less, of course, $334K. That's up 3% from last year. Regarding just Austin area proper, we're looking at 985 homes sold this month, or in June of this year. That's 2% lower than last year. 30 days on market of June this year. That's just 1 day lower than last year. The Austin area, we have 3,349 sold, which is right about the same as last year, and 46 days on market in June, which is the same as last year. So what drives housing prices? It's mostly good jobs. We have all of these tech companies that continue to move here from California and other places. The business taxes are a lot less in the great state of Texas, and the lifestyle is similar here, and it's much cheaper. These employers can get talent that's much less expensive than they would have to pay for in California due to the cost of living, which we'll talk about later. Interest rates are low right now. That keeps prices surging upwards. They're really low, actually. Taxes are less here. Quality of life, it's Austin. Foreign investors and cash buyers. You know, we've had people who cash out from their startups who have cash. You know, that drives up prices. If you look at the Denver area, for instance, the cannabis industry has been such a boom, and they can't really put that money in banks, so they put it in real estate. That's driving up prices in Denver. Luckily, not a problem in Austin yet, at least. So let's look at these other markets and kind of how Austin is positioned in the national scene. So National Association of Realtors statistics. For the Austin area, that includes Austin proper and the outlying areas, $343,000 is the second quarter of 2019 median price, $343, okay? Let's look at some of our competitors. Denver's at $471K. That's a 37% increase over Austin's. Boston's at $506K, a 48% increase over Austin. Seattle's at $542, 58% increase. LA, $567, 65% increase over Austin. Now this is where it starts getting crazy, y'all. San Francisco, $1,050,000. That's a 206% increase over Austin. And then the San Jose, Silicon Valley area, $1.33 million. That's 288% increase over Austin. Those people want to likely get the heck out of there if they have an opportunity, Austin. And guess what's considered cheap to them? Austin. So even though we're marginally more expensive than other Texas cities like Dallas and Houston, we're way underpriced compared to these other Class A, coastal, top tier cities with a lot of tech talent. Austin is considered the 10th biggest tech city worldwide. That's with cities like Singapore and Hong Kong thrown in as well. Very attractive to a lot of people who are making the move down here. We are a steal for these people. That's going to help your house value keep rising, even if the national economy starts to slow down a bit. And actually, I would argue that Austin is considered more of a B-plus city. So all these Class A cities like San Francisco, New York, Boston, Seattle, they still have the lifestyle amenities here. It's very attractive to them, and it's going to keep happening because when a lot of these tech jobs start kind of drying up in these Class A markets and people aren't able to afford them, they're going to look at Austin. That's a Class B plus market. We can afford that. We're going to go there. And then finally, NerdWallet.com. I love this website. They have a cost of living calculator that looks at not just housing costs, but a lot of different things. So housing affordability, transportation expenses, food prices, entertainment costs. That goes into their cost of living calculator. So what you do is you indicate what city you live in, what city that you're looking to move to, and then you put in your current salary in the city that you live in, right? So just for example, we put in Austin, Texas, where we're currently living, and $100,000, just to make the numbers easy. So, and a lot of tech people are making $100,000 in this town, the young kind of tech people that tend to be our clients. So San Francisco, comparable income, $201,000. Los Angeles, $149K. Miami's $116. Chicago's $120. Boston's $154K. New York, Manhattan, $239,000. Right? So you would have to make an astronomical, mind-blowing amount of money in these Class A cities to live the same lifestyle that you would live in Austin on $100,000. And you could scale that back. $50,000 in Austin would be $100K in San Francisco Bay Area, and so on and so forth. So check out NerdWallet.com. It's all great stuff. Anyway, I hope that was good information on helping you understand what's currently happening with the Austin market and how it relates to other markets in the U.S. I don't think things are going to slow down anytime soon here, y'all. Maybe the 12% appreciation rates of the middle part of this decade are a thing of the past, but it's going to be healthy from now on. So anyways, y'all, this is Drew. Hope you enjoyed that video. Hope you enjoyed the newsletter. We'll get some more to you on a weekly basis. All right, take it easy, y'all.